Welcome back. On to your markets news now. And most markets were mixed in Asia on Wednesday morning as investors moved cautiously after the previous day's sell-off, while focus is on the Federal Reserve policy decision, with opinions split on whether or not it should hike interest rates again. Oil prices also edged up, but were struggling to make a dent in the steep losses sustained on Tuesday as traders fret over a global supply glut. Now, higher production and the outlook for demand also looking a little sketchy. It was a mostly negative day in the Far East as Tokyo's Nikkei dropped 0.6%, while the Hang Seng was the only gainer on the day, rising 0.2% at 25,865 points. The Shanghai Composite lost a massive 1.1% to close off at 2,549 points. Over into the United States, and the S&P 500 ended little change in a choppy trading session on Tuesday, as the possibility of a partial government shutdown added to investors' jitters ahead of a highly anticipated meeting of the Federal Reserve. The Dow Jones Industrial ticking up by 0.3% to 23,675 points. The S&P 500 up marginally to 22,546 points. And the Shanghai Composite added almost 0.5% to finish the trading day at 6,783 points. It's been a mostly negative day across the board, right? And even the year, locally, we are still down over 14%. And across Europe, we're seeing the likes of the FTSE even go down more than 12% for the year. So that negative tilt continues across the board. Let's check in, however, on how today's markets are faring when we take a look at South Africa and the globe. Well, Viv Governor from Rand Swiss joins me now from our JSE studio for more on the markets and that picture. Viv, thank you so much for the time. Yesterday wasn't such a good day, but 0.5% to the good today. The JSE, one day good, one day bad. We just seem to have this up and down movement across the board here.
Yes, unfortunately, the bad day seems to be basically outnumber and be bigger than the good days, at least for the last, say, 2-3 months internationally and for South Africa for quite some time, especially in dollar terms. So I think overall this has been a very bad, little while for South Africa. And the last couple of months have been really bad for international markets as well. Yeah, as we said, across the board, around 14% lost for most of the JSE, particularly the All Share. When one takes a look at how the stocks are doing on a year-to-date basis, just behind you, the banks specifically, Standard Bank, Absa, Nedbank, even Bidvest, they're sitting down. All of them are down for the year. Nedbank seemingly the only one that has managed to pick up some sort of gains. It has been a tough year for those banking stocks. Yeah, I mean, I think one of the key factors here is, of course, the GDP count. I mean, if you look at the start of the year when we were in full Ramaphosa swing, and look at where we are right now, Ramaphosa swing, sorry, and look at right now and we see what the actual GDP number for the year is looking like. I mean, it was a surprisingly negative, a very bad year, and for a large period of the year, it was actually negative growth for South Africa with the recession, of course. And I think that disappointment really feeds through the banks because the banks depend on trust, they depend on GDP growth, and those two factors were really under pressure this year. It remains to be seen what happens next year when we have the elections as well to worry about. Yeah, very, very key elements and key aspects to put together. Speaking of banks, the Federal Reserve out in the United States, that meeting is certainly quite significant and quite important, right? The decision of whether to hike interest rates or not, slow down that process of interest rate normalization. What are your thoughts on it? Yeah, look, I mean, the Federal Reserve, I mean, here's the thing. Trump was probably right. Trump was right about the Federal Reserve being
we don't hear that very
wrong
often
about raising interest rates. And yeah, when it happens, it's bad in a couple of ways. Firstly, he's right, and secondly, he's telling the Federal Reserve he's right, and telling the Federal Reserve what they should be doing. And the problem is the Federal Reserve probably might want to, halt now, but if they do, they will also give the impression that they're basically caving into Trump. So the right thing to do is probably not to raise rates in this current environment. The US doesn't have a really big inflation problem right now. Growth is coming down quite significantly. And the real indicators that we see from, like, for instance, talking to CEOs and other decision makers in the economy, is that the chance that they are putting for a real big downturn in 2019 is significant. And so basically rising or increasing interest rates into that environment is probably going to be quite negative. But at the same time, you don't want to be seeing, especially after you said, I'm going to be raising rates in this kind of schedule for the next year and a bit. And then the president comes and says, no, you should not. It's a terrible thing to do. And then you cave or appear to cave. That's obviously another negative because you kind of takes away some of the perceived independence of the reserve as well. Yeah,
and also China, the USA, that fight continues to wage on. And it has been the big market puller for this year as well, hasn't it?
Oh, yes, most certainly. I mean, China is either now or going to be quite soon the biggest economy in the world. The US, however, is still the most dynamic of the large developed economies out there. It is a battle that's quite important. And historically, there's actually a technical term for this. When we have two powers, when one big power overtakes another power to become the predominant power in the world, often there is conflict. And it's been something that's happened almost always whenever we have this happen, where what was once the big power like the US is being overtaken by a secondary power that's now going to be the biggest power like China is. You always have conflict. Hopefully this conflict stays within the realm of like trade, etc. But the trade war between the US and China has gone beyond just tariffs. We've seen, for instance, the banning of Huawei. We've seen the arrest of the CFO of Huawei as well. We've seen basically counter arrests by the Chinese of Canadian citizens because the Canadians on behalf of the US has arrested the CFO of Huawei. I think the third one was just arrested today. The third Canadian person in China was arrested today.
Yeah.
This kind of stuff is basically ratcheting up the tensions in the environment. And I do think that both sides, even the Chinese, despite the fact that they're not a democracy, still have to play to their own political topics. And we've seen, for instance, Xi Jinping coming out recently and says nobody has the right to dictate to China, and that's something I think is going to be very worrisome over the next year or two while these tensions are so high.
Yeah. Very, very critical factors there. At the same time, we've had the likes of Brexit happening. We've had that oil price issue as well come to the fore. But one thing I wanted to touch on is the IMF chief, Christine Lagarde, is in South Africa. Many questions are rising on that front as to whether we need the help, whether we should get help from the IMF. And considering the 419 billion rand debt that Eskom sits with, those questions are justified, aren't they?
Yeah, I mean, it's worrisome when we see they're coming out for visits. Look, there's not like a talk right now of anything happening in the immediate future, but we've seen recently Ukraine and then I think also Ghana as well having some issues there. We don't really want the IMF to come into play in South Africa. It's something that we must avoid at all costs. They come in with basically a hatchet when probably we need a scalpel. They force us to do, or force countries to do really painful things. Maybe in the long term it might be positive, but history has shown that countries that have had IMF intervention don't really do very well thereafter. And we need to avoid that kind of prospect at all costs. But like I said, there's not anything on the cards at the moment. Just a visit. It could just be a friendly visit on the way to somewhere else. But it is worrisome that we are in a situation where if things don't change around in the next couple of years, we may need to have this kind of intervention. And like I said, historically, countries that have had IMF and other international body intervention, things that follow what's called the Washington Consensus, it really hasn't really worked out for those countries, especially in the short to medium term.
Yeah. Viv, Governor, really appreciate your time, but I hope you have a wonderful festive season, and we'll chat again in the new year. Hopefully things get a little bit better in the markets and stay up at the very least heading into next year. Viv Governor from Rand Swiss. As you take a look there, the market there on 14 Rand 28 for a US dollar in that price range over there. Just around $58 as well a barrel if you take a look at the price of oil. So we'll see that oil price affecting South Africa's petrol price as well as we head into the new year. Well, that's where the buck stops this afternoon. Zinger continues with your news headlines right after this. Do stay tuned to Market Sense here on Point.